Namaste, Namaskara, Vanakkam. Guys, lot of students requested me, sir, please upload super questions for CA Intermediate Jan 2026 examination. And here I am with the full-fledged video, guys. 7 questions I have picked, and trust me, guys, this is the best video you can watch on YouTube at this moment. Within just 2 hours of this time, I will be covering 33 marks, guys. Trust me, because you know very well, total income every attempt it comes for 15 marks. In your attempt also it is going to come, and I have picked such a question where almost every chapter adjustment is covered in that, total tax liability is covered in that, and TDS credit, everything is included in this one question, guys. And for clubbing set off carry forward of losses, I have picked 2 questions, guys. 6 marks every attempt. You pick last 5 attempts question papers and check residential status clubbing set off. Every attempt you will find 6 mark questions, guys. So you just finish off this 2 hours of video with 1.5 speed. If you finish just within 1.5 hours, you are covering almost 33 marks, guys. Lot of students know the provisions, but they do not know how to apply the provision in the examination hall. This video is going to be very helpful for you guys. And write in the comment section with the positivity that I am going to clear damn Jan 2026 examination, and definitely you will clear, guys. One more thing I want to tell you, I want to caution you. Every attempt, ICA generally screw you in one paper, at least in a group. Now in this Jan 26 attempt, accounts and law were not so difficult. Like last attempt, if you remember, law was damn tough. But this attempt, accounts law, it was not so tough. So we can expect a tax, maybe not, if not that level of difficulty, at least it will be tough paper. And these 7 questions will help you, guys. I have covered residential status, capital gains. Mind you, guys, capital gains, lot of amendments are there in this attempt. Pakka, I can say minimum 6 marks will come. And that too, I have covered the important adjustments in these questions, guys. So please watch the video till the end. Share with your friends also. I have uploaded full income tax revision within just 3.5 hours on my YouTube channel, Master Revision. Go and watch that, which I uploaded yesterday. It was live. One more thing, I have uploaded 50 super adjustments of total income computation on my YouTube channel within just 20 minutes. 50 adjustments you can cover. That video also you can watch, guys. And please, one like you can do, guys. I am doing so much of effort, so one like I deserve, and one comment. What about your feelings about this marathon, guys? Okay, enjoy the class, guys. Okay, guys, let's start the next question. Very beautiful question, and I think this question may come from the capital gains topic, guys. Here you will find IFOS, capital gain, salary, everything is mixed here in this question. Very important. Let's read this slowly, guys. Mr. Aryan, a resident individual, is working in Nischay Limited and earns salary of 90,000 rupees per month. So Mr. Aryan is a resident individual. He is working and is earning a salary of 90,000 rupees per month, guys. So there is a salary income. Next, he holds 20,000 equity shares of Alpha Limited, an Indian listed company, guys. Listed company, very important. Purchased on 1st January 2016 at 200 rupees per share. So he is having 20,000 equity shares of a listed company, which was purchased on 1st Jan 2016, guys. Mind you, 1st Jan 2016, very important. And 200 rupees per share he spent to purchase these shares. The cost of acquisition is 200 rupees per share. These were acquired through a recognized stock exchange, and STT was paid on both acquisition and sale, guys. Now, in August 2024, Mr. Aryan transferred a plot. Plot means what, guys? Plot means land, guys. In Chandigarh for 70 lakh rupees. So you can say full value of consideration of land will be 70 lakh rupees, guys. Yes, next. Which was acquired by him in May 2016. Guys, the transfer is happening in August 2024 and purchased in the year 2016. It is a long-term capital asset. But mind you, guys, here we will not give indexation benefit. The reason is very simple. If you remember, the cutoff date for indexation is 23rd July 2024. The transfer is happening here after 23rd of July 2024 in the month of August, guys. So no index benefit here, guys. Mind you, no index benefit we will give. Yes, for 22 lakh rupees, guys, he was acquired. This is called cost of acquisition, guys. cost of acquisition is 22 lakhs and the full value of consideration is 70 lakhs. But he paid a brokerage of 1% on transfer. So 1% brokerage we have to reduce from the full value of consideration. In November 2024, Alpha Limited decided to buy back, very important guys, buy back 50% of its shares at 250 rupees per share. Guys, this person has 20,000 equity shares of Alpha Limited, and that company is buying back only 50% of the shares at 250 rupees per share, guys. Out of 20,000 equity shares, only 10,000 equity shares, 50% means 10,000 equity shares will be bought back at the rate of 250 rupees per share, guys. Alpha Limited bought back proportionate of shares under Mr. Aryan. In May 2025, Mr. Aryan acquired a residential house property in Kanpur for 40 lakh rupees. So, in Kanpur, this person has purchased a new house property, residential house property. Fair market value of equity shares of Alpha Limited on 31st of Jan 2018 was 190 per share. Guys, if you remember, if you have purchased any shares before 31st of Jan 2018, if you purchase any listed shares, listed equity shares before 31st of Jan 2018, and if you are selling the shares after 31st of Jan 2018, you have to do grandfathering effect of the cost of acquisition, correct? So in this case also, on the buyback of shares, whenever we will take the cost of acquisition, we have to do the grandfathering effect, guys. Be very careful. And the fair market value is given 190 rupees per share. We are required to compute the total income. Total income means salary, income, IFOS and capital gains, everything put together of Mr. Aryan if he is paying tax under the default tax regime, guys. Default tax regime, and indexation information is given. Guys, very simple. First, we will take the first information in the line. Mr. Aryan is working as a salaried employee. So guys, salary will be how much? It is given that 90,000 rupees per month he is earning, and mind you, this is default tax regime, so salary income will be 90,000 into 12. That will be how much? 90,000 into 12. 90,000 into 12 is 10 lakh 80,000. Out of 10 lakh 80,000, remove standard deduction default tax regime 75,000 you take off, guys. So if you remove that, 10 lakh 5,000 will be salary income. Taxable salary will be 10 lakh 50,000 rupees, guys. Next information. Next, he holds 20,000 equity shares of Alpha Limited listed so and so. Okay. Next, he sold a plot of land in Chandigarh for 70 lakhs. He paid brokerage 1% and the cost of acquisition is 22 lakhs. In that case, what capital gain we will get? We will get long-term capital gain, guys. Yes, we will get long-term capital gain. Wait a second. Yes, here long-term capital gain on plot of land we have to calculate, correct? One second, guys. Yes, first we will take full value of consideration is how much? Given in the question is 70 lakh rupees, correct? So 70 lakhs we will take. From 70 lakhs, brokerage is there, less brokerage at rate of 1%, it is there, guys. How much that is? 1% means 70 lakhs into 1%. That is 70,000 rupees. 70,000 rupees. If I remove that, how much it will be? 69 lakh 30,000 is the net consideration, guys. Net consideration. Out of that, I have to remove 22 lakhs, sir. This was purchased in 2016. We are selling in 2024. Long term, no, sir. Indexation you give. No indexation because the transfer is happening after 23rd of July 2024. So no indexation benefit. Less cost of acquisition will be 22 lakh rupees, guys. So that will give you long-term capital gain of how much? 69 minus 22. 47 lakh 30,000 rupees is the long-term capital gain. But keep in mind one thing here. He has purchased a new house property. Against this, he can claim a 54F exemption, correct? Because sold plot of land and he is purchasing residential house property, he can claim exemption, guys. So I'll write here less exemption under section 54F. Always keep in mind, in section 54F, the exemption you will get proportionate based on the amount of total investment you made, correct? Now 47 lakh 30,000 is the long term capital gain. Multiply it with how much is the purchase price. The new property you purchased only for 40 lakhs. So into 40 lakhs divided by here, how much is the total investment you should invest? 69 lakh 30,000 you should invest. So if I divide 69.3 lakhs, that will be 47 lakh 30,000 into 40 divided by 69.3, that will be 27 lakh 30,158, guys. So if I remove this exemption, net long term capital gain will be how much, guys? 47 lakh 30,000 minus 27 lakh 30,158, that will be 19 lakh 99,842. Guys, this is the net long term capital gain which will be taxed, and we have got a salary also. But the story don't end there. There is much information given in the question. What is that? Buyback. Guys, now I will teach you what exactly is buyback, guys. In buyback, what you should do. See, whenever a buyback happens in the hands of shareholders, in hands of shareholder, how to compute the tax liability, I'll tell you. Two kinds of income will come, guys. Income from other source and capital gain. Whatever actual buyback price is there, that will become full deemed dividend under section deemed dividend under section 222F, guys. Now, in our case, how many shares are being bought back? Out of 20,000 shares, 50% shares means 10,000 shares are bought back by the company at what is the price given? See here, the price is given 200. Wait a second. Listed. No. Wait, here. Buyback of 50% of the shares at 250 rupees per share, guys. So 250 means into 250, that will be 10,000 into 250 will become 25 lakh rupees, guys. 25 lakh rupees will become deemed dividend under IFOS, guys. This is IFOS amount straight away. Now, in buyback only, you should also compute capital gains, but always keep in mind, for capital gain computation purpose, the full value of consideration always you have to take nil, guys. I have taught this concept in the revision marathon video, also in practice batch also. Less, you have to take the cost of acquisition here. But mind you, in this question, we will not take the actual cost of acquisition of 200 rupees per share. We will not directly take, because here the shares were purchased before 31st of Jan 2018, and that too these are listed shares. So after 31st of Jan 2018, whenever the buyback is happening or normal sale also happening, you have to take the grandfathered effect of cost of acquisition. Now, for grandfathering the cost of acquisition, you have to compare two things. First, higher of 1 and 2 you have to take. Sir, what is 1, sir? 1 means the actual cost of acquisition you have to take. What is the actual cost of acquisition in our case? See here, purchased on 1st January at the rate of 200 rupees per share. So 200 rupees will be the actual cost of acquisition. Next, 2. See, in 2 there will be lower of two things you have to take. Lower of two things. Number 1, A, you will take what you know, FMV as on 31st of Jan 2018 we have to take. What is given in the question? Here, you see, I'll again highlight here. FMB of equity share as on 31st of Jan 2000 is 190 rupees per share, correct? So 190 we will take, and B, you have to take the full value of consideration. I just now told you, in case of buyback, you have to always consider the full value of consideration only as a sunyam. So here you will take sunyam. Now we have to take lower of A and B, means lower of 190 and 0 will be 0. This 0 is a 2 figure. One figure is what? 200, and we have to take higher of 1 and 2. So higher of 200 and 0 will be 200. But that is a negative figure, and that too this is a per share figure. How many shares are being bought back here? 10,000. So that will give you a long-term capital loss of how much? 10,000 shares into 200. That will be 20 lakh rupees. Correct? This is long-term capital loss from the buyback of the shares which has happened. Apart from this, there is no other information, guys. So if total income is asked in question, total income is the demand of the question. First we will take what? Salary. Then we have capital gain we have, then we have IFOS, correct? This will be your total income. How much salary we got initially? 10 lakh 50,000 we have got. So 10 lakh 50,000 you will take it here. Now capital gain. See guys, capital gain, there is a capital gain of 19 lakh 99,842, but there is a long term capital loss. Guys, remember a set of carry forward of loss. Long term capital loss can be set off with long term capital gain, correct? Now long term capital loss is 20 lakhs. Loss is 20 lakhs and gain both are long term only. Long term, both are long term only, and gain we have this 19,99,842. 19,99,842. So if I have to set off this loss with this gain, how much will be remaining loss? Guys, 158 rupees of loss will be still there. This loss I can't set off with any other thing. Remember, yes. So this long-term capital loss of long-term capital loss carried forward to the next year, guys. Next, IFOS, how much we have? IFOS, one second. Here 25 lakhs of IFOS. 25 lakh rupees of IFOS. So 25 lakhs of IFOS plus 10 lakh 50,000 of this 35 lakh 50,000 rupees will be total income, guys, and 158 loss will be paid forward to the next year. I hope that is clear, guys. Revise this. Definitely this question can come in examination, at least this adjustment. Okay, next 7, guys. Let's move on to the next question. Question number 7. I'm reading out the question, guys. Mr. A is a proprietor of Akash Enterprises having 2 units. He transferred on 1/4/2024 his unit 1 by way of slum sale. Yesterday I taught you slum sale for a total consideration of 25 lakhs. Mind you, guys, the actual consideration. So what is it trying to say is, this is the total organization, and in this organization there are 2 units, unit 1, unit 2. This unit 1 he is planning to sell for just 25 lakh rupees. He is planning to sell it off. Mind you, here different separate asset is not being sold. One whole unit is being sold. One business unit is being sold for a consideration of 25 lakhs. The fair market value of capital assets of unit 1 on 1/4/2024 is 30 lakhs. Sir, why fair market value of the unit 1 is given? Guys, if you remember yesterday's discussion, I told you that in case of slum sale, the full value of consideration which you will take will be 2 FMVs you need to consider, and the higher of both the FMVs you will consider. Sir, first FMV was higher of 2 you have to take. In the first was the actual sale consideration, guys. Actual sale consideration, then the FMV which is you are getting. So 30 lakhs or 25 lakhs, whichever is higher will be what? 30 lakhs will become your full value of consideration, guys. In yesterday's discussion, I taught you in case of slum sale, you will not take full value of consideration, the actual sale value. You will compare 2 fair market values. Number 1, the fair market value of the unit which you are selling, which is given as 30 lakh rupees. And the second one is the actual sale consideration, the fair market value of the assets which you are selling in the unit. Yes, that is 25 lakhs. So both higher will become 30 lakhs, guys. Yes, correct, Jaishankar. So we have arrived out what? Only the full value of consideration. Let's look at the other information. Unit 1 was started in 2005-2006. Now mind you, your unit started in 2005-6, but you are selling the unit in 2024. Mind you, guys, in case of slum sale, if the unit is held for more than 36 months, it will be called as long-term capital gain, guys. So it is more than 36 months. So the capital gain whichever will come out of this slum sale, we will call it as long-term capital gain. The expenses incurred for the transfer were 28,000. Mind you, guys, this 28,000 you can claim from this 30 lakh rupees as transfer expenses. Out of 30 lakhs, if you remove 28,000 transfer expenses, that will be 30 lakhs minus 28,000, that is 29 lakh 72,000 will be called as net sale value or net consideration, guys. 29,72,000 is the net consideration, guys. Next. So the balance sheet as on 31st of March 2024, which is just before the transfer of Unit 1 is given. Let's look at it. Unit 1, Unit 2. But here, mind you, on the liability side, both the units put together amount is given. On the asset side, Unit 1, Unit 2, separate figures are given. But sir, how will I know in liabilities what is the Unit 1 figure? Don't worry, don't worry. Here it says Unit 1 how much, Unit 1 how much, Unit 1 how much. Got it? So land is given, machinery, debtors, other assets. Revaluation reserve is given, bank loan is given, trade creditors is given. Next, other information, guys. Slum sale, there is a chance if capital gains they want to form a separate question on capital gain, not like a mix in other incomes. If they want a separate question, in that case slum sale has a lot of chances. Yes, easy concept, but there are some conditions which you need to remember, guys. Other information, revaluation reserve is created by revising upward the value of land of Unit 1. Guys, in the slum sale there is one condition. If any asset is revalued, maybe decreased or increased, but revalued, that revalued amount we should not consider. We should take the actual amount of land. Let's say for example, if the asset which is mentioned here, land, is revised upward, means land is already overvalued. So we should not consider the revalued amount. So we will bring down that land value to that extent. Correct? So if we need to see that how much is revised upward, it says what? Whatever revaluation reserve is created, that is by upward revising the land. So this revaluation reserve of 3 lakhs, what is there? This is created out of revaluing the land. Upside means what? Land is then actual value will be 12 lakhs minus 3 lakhs. So the actual value of land which we will consider is 12 minus 3, which will be 9 lakh rupees only. We will not consider land value as 12 lakhs, mind you guys. I hope that is clear. Next point. No individual value of any asset is considered in the transfer deed. Good enough. Other assets of Unit 1 include patents acquired on 1/7/2022 for 50,000, on which no depreciation has been charged. Now guys, other assets means what? Here you see other assets 1,50,000. So what is this point trying to say is, out of other assets of 1,50,000 rupees, 50,000 worth the patent is included, on which no depreciation has been charged. Guys, mind you, at the time when you will calculate the net worth of the slum sale unit, of the unit which you are selling as a slum sale, at the time you will calculate the net worth. Net worth is nothing but what? What is your assets minus liabilities will be your net worth. But mind you guys, in case of depreciable assets, you should take the WDV value of the depreciable asset for the net worth calculation purpose. But they have missed out on the depreciation. So guys, mind you, this asset was purchased in 2022, guys. So this was 22-23 financial year. But we are selling, the slum sale is happening in which financial year? In which financial year? Till 2024 this is given, but the slum sale is happening in 2024-25 financial year. Correct? 2024-25 financial year. See here, 1/4/2024 the slum sale is happening. So 22-23, 23-24 you need to calculate depreciation, reduce the patent value, and the net amount we will take it as WDV for net worth calculation. So if 50,000 is the amount, guys, patent is a intangible asset, guys. Patent is an intangible asset. Remember the block of asset concept. In the block of asset it says 25% is the rate of depreciation on intangible assets. So if I have to reduce and arrive at the WDV value for the first year, I have to reduce 50,000 into 25%. That will be 12,500. Sir, don't we check less than 180, more than 180 days? We do check, but the date is given here, no, already July, which is before, on or before 3rd of October. So full depreciation given for first year. So for first year the WDV will become 37,500. But we cannot stop there. There is one more year which we need to give depreciation. That too also 25%. But mind you, 25% not on 50,000. 25% on 37,500. That will be 9375. So the net will become 28,125. We will be taking 28,125 as patent value, guys, as patent value. Now mind you, 28,125, 28,125. Yes, correct. 28,125. Now guys, mind you, at the time of considering the assets value for net worth purpose, we will not take other assets as 1,50,000. We will take other assets 1 lakh, and patents we will take the figure which we got just now as 28,125 we will take. Got it? Patents, we reduce that 50,000 rupees of patents from the other assets, and patents separately we will take 28,125. Next. The value of machinery represents the written down value as per Income Tax Act. It is trying to say that this machinery is already written down value. You don't do any kind of adjustment to it. Compute the capital gain for assessment year 25-26. First of all, in slum sale, how do we compute the capital gain is the point. Number one, you will take the full value of consideration. Full value of consideration is nothing but higher of two fair market values. Number one, the actual fair market value of the consideration what you are getting, and number two is what is the fair market value given here of all the assets which are given. So we have already calculated that was 30 lakhs. From that you can reduce your transfer expenses. 28,000 is given in the question. So 28, if you remove, 29,72,000 will be your net full value of consideration. From that you need to remove net worth of the unit which you are transferring. For net worth you will take all the assets minus the liabilities which you have. While taking the land value, we have to reduce 3 lakh rupees because in the question it is given it is overvalued. Machinery we will take the exact value of 3 lakhs. Debtors we will take exact value of 1 lakh because there is no adjustments. Other assets we will consider 1 lakh. Patents we will consider 28,125. On the liability side, out of 2 lakhs bank loan, 70% only belongs to unit 1. So 2 lakhs into 70% will be, I think 2 sevens are 14. So 1,40,000 we will reduce. And the trade creditors 25% of 1,50,000 means that will be 37,500 I will consider. And we will reduce this. We will get net worth. That net worth I will reduce from the net consideration of 29,72,000. I will be able to arrive at my long-term capital gain. Sir, why are you calling it long-term, sir? See, your unit was created in 2005-6. You are selling in 2024. More than 36 months. 36 months. Guys, in slum sale you see 36 months, not 24, not 12. So more than 36 months over. That is why we are calling it long term. Sir, if it is a long term, you should take indexation. No, sir. No, indexation benefit is not available in case of slum sale. With this understanding, let's jump into solving the question, guys. So I am solving now the question. Okay. So I'll be looking at the question on my screen. You guys can also start solving it on your own, guys. So question bank, question number 7. Guys, lot of times there is a chance slum sale will be asked in examination, guys. Yes. So be careful. I am writing the heading now. Computation of the demand of the question I am writing. Computation of, what is it given? Capital gain. Computation of capital gain for Mr. A, or I can say of Mr. A, on slum sale for assessment year 25-26. Like this I will present in my examination. First I will take particulars, amount or rupees I can say. First full value of consideration we need to take. Guys, you guys also please do it, guys. Don't just look at the board or the screen. Please solve it. Unless you solve it, you will not know where you are going wrong. Yes, full value of consideration. So I will take higher of following. I'll write number 1. FMV of unit 1 given, which is 30 lakhs. I'll write number 2. Actual consideration. FMV of actual consideration, that is 25 lakhs. So higher of these two in the sense that will be my 30 lakh rupees, guys. Then transfer expenses are also given. I am reducing that here. Less transfer expenses given 28,000. Correct? Correct. That will give me my net sale consideration. So 28,000, if I reduce 29 lakh 72,000. From that I have to reduce net worth, less net worth. I'll prepare a working note for this in examination separately, and I'll write it here. Working note. I'll write here net worth calculation. First, I'll take, guys, particulars rupees. First, I'll take all the assets. Assets, under which I'll write land. I'll write in bracket excluding revaluation. I'll mention like this, so the examiner knows that I've reduced that. And in bracket I'll write 12 lakhs minus 3 lakhs. That will be 9 lakhs of land. Next asset given is machinery, but no adjustment needed for machinery. So machinery. How much is given? That 3 lakh rupees. Next, it is given debtors, guys. Debtors also no adjustment needed, 1 lakh. Next, patents. See, other assets. First I will write other assets, and in bracket I'll write 1,50,000 minus 50,000. That I'll write 1 lakh. Then I'll write patents. I'll write patents, and I will show the workings here only. No problem. How much is the opening WDV? Was 50,000. Less, or opening WDV, rather writing opening WDV, I'll write like this. I'll write cost on 1st of July 2022. I'll write that will be 50,000 less depreciation for 22-23 at the rate of patent means 25%. That will be 12,500. Next, that will be 37,500. WDV for 23-24 purpose less depreciation for 23-24. That will be 9,375, and that net will be 28,125. This 28,125 I write here 28,125, guys. Next, so total of assets I'll write here. Total assets equals to, I'll total the amounts: 9 lakhs, 3 lakhs, 2 lakhs, 28,125. I am getting 14 lakh 28,125. Next, less liabilities have to reduce. No, less bank loan. What is the percentage given? 70%. That will be 2 lakhs into, I'll show here itself, 70%, 1,40,000. Next, creditors 25%. I'll show here only 1,50,000 into 25%. That will be 37,500, guys. So if I reduce these two figures from here, I'll get net worth of unit 1. That will be 12,50,625 I'm getting. So I'll write it here equals to 12,50,625, guys. 12,50,625 I'm getting. So if I remove these two, I'll get long-term capital gain. That will be 29,72,125,065. I am getting 17,21,375. Then I'll write a note here. Note 1, as the unit 1 is existing for more than 36 months, the capital gain is treated as long term. This I will write. Question number 8, guys. I am reading September 2025 RTP question number 8. I am reading this question, guys. Sir, where will I find this? In my video's description, there is a link. Tax Thalaiva free resources. Click on that. You will be able to find a September 25 RTP. I'll not waste my time much. I am reading the question. Mr. Suraj, aged 40 years, submits the following information regarding 31st of March 2020-25. He is employed in ABC Limited, earned salary income of 10,50,000. ABC Limited, salary computed, salary. Next. He is engaged in speculation and non-speculation. Speculation means rich guy. Speculation means rich. Non-speculation means poor. So he has both. He earned profit from speculation business of 60, suffered from a loss of non-specified, means rich person has profit, poor person has loss. Means rich person will help a poor person, correct? So I am reviewing this all here. So speculation business 60,000 profit, non-speculation business 40,000 loss. So I'll set off 20,000 will be PGBP, guys, so far. PGBP, guys, so far. Next. He reported short-term capital gain, means baby has profit. Baby has profit of 80,000. He also received lottery winnings, lottery special income 20,000 IFOS. This is IFOS, guys. Lottery is IFOS. But there is a short-term capital gain of 80,000. Next. He has brought forward long-term capital loss of 30,000 from assessment year 23-24. Big brother is in trouble. Sister cannot help. Sister, because big brother will have ego issues. He will not take help. This is brought forward, guys, from previous year. This is not current year. So we need to check in this year, big brother has any other big brother or not. If there is no big brother, this will straight away again carry forward to the next year. Okay. Loss, this is long term. Mr. Suraj has 2 children. One married daughter. Married daughter aged 17 means minor. Married daughter has 17 years of age. Ria, Papa Ria, and son Raj, 88 Raj. 16 years means minor son. The interest income of Ria and Raj is 1200 and 2000 per annum respectively. Okay, interest income means this should go in IFOS clubbing. But we need to check whether Mr. A's income will be more, or Mr. Suraj income will be more, or his spouse's income will be more, because the parent who has the highest income, in that parent's hand only clubbing should happen. But clubbing will definitely happen under IFOS head. But in whose hands it will club, that we need to check. And at the name of clubbing, 1,500 rupees per child. Per child. We will take it as exemption. But sir, here 1,200 only. Then we will take 1,200 only. Sir, here 2,000, sir, 1,500 only. Getting it? Next. He transferred a flat to Ria. Oh, ho. Ria is a small daughter, cute daughter. On April, on account of nature, love, and affection, this flat was let out on that day. Gentle and generated rental income of 5,000. Guys, I told you one thing. Generally, if you transfer a residential house property for without adequate consideration to your spouse or to your children, you will be deemed as owner under income from house property. That rental income will not come under clubbing provisions. But if you transferred this house property to minor married daughter, in that case, income from house property, no. You will tax it under clubbing provisions only. So this rent will be clubbed in a parents as club. Once you club 1,500 rupees, you will take no. But for Ria already you are taking here 1,500 exemption. No, you will not take here again 1,500 only. Club will happen. Clubbing okay. How much, sir? 5,000 into 12. That will be 60,000 club. Under income from house property, and we will take 30% standard deduction as well. Next. Mr. Suraj paid a medical insurance premium of 22,000 during the financial year to insure his health, spouse, dependent, children. So, medical insurance means 80D, 22,000 possible. Next. Additionally, he paid 33,000 to insure health of his mother, age 60-67. 80D, self I'll write here. Then I'll write here, guys. I'll write in blue color. 80D, mother. Senior citizen. How much he paid? 33,000. Full eligible, mother eligible. Next. Who is not dependent? Dependency and all does not matter. He also incurred 20,000 as medical expense for his father age 71 years who is not dependent on him. Guys, you will get medical expenditure benefit only if you do not have a health insurance premium. So let's see on that any information is given. And is not covered under any insurance policy. Appa. So father, senior citizen, he will also get 50,000 cap. But ultimately, mother, father put together 50,000 cap. Getting it? So 20,000 only equals to 20,000. So mother and father put together it is 53,000. But maximum 80D for parents it will be 50,000. Next. He contributed 6,000 during the year to central government health scheme. So add central government health scheme 6,000. But guys, Mr. Suraj is age of 40 years, not a senior citizen. So restricted to. Total is 28,000. Restricted to not 28 but 25,000. So 80D will be how much? Total 80D will be 25,000 for self and 50,000 for parents. Total 75,000. 80D we will take it. Next. That's all information. Compute the total income of Suraj assuming that Mr. Suraj's total income is higher than Mrs. Suraj's total income. Okay. Then we will club Riya's Raj income in our Mr. Suraj hand only. Before including that minor children, okay, Mr. Suraj exercises the shifting out of default tax regime. That's all, guys. You are required to compute what you know. You are required to compute the total income of Suraj. And we will club in the hands of the Suraj only. So clubbing again, I will come, guys. Clubbing. So now we got to know in Suraj we need to club. So let's see what we will club in Suraj. This and all capital gain we discussed. 2 children, 1 married daughter. So we will club 1,200 plus 2,000 also. Per annum this is. So 1,200 minus 1,200 Sunyam. 2,000 minus 1,500. 500 will be taxable. Then rental income we will club of Ria. There we will take another 300 we have no. Or else we can do like this. Ria 1,200 interest Rent this much, less 1500 rupees. Guys, am I starting? I am starting. Okay, 1 minute over. Mr. K, 48 years old, resident individual. Details of income earned during the previous year 25 from diversified business and investment portfolios are as follows. He runs two businesses, manufacturing and speculation. Loss, profit. Profit, loss. Manufacturing, speculation. Rich person has a problem. Poor person has money. No set off will happen. No set off will happen because rich person will not take help of poor person. Next, he incurred loss of 2 lakh. Okay, again loss. Let out a property and also earn income of 50,000 from activity of owning and maintaining race horses. For earning this income, he incurred 5,000 of expenses. Guys, what is it trying to say? What is it trying to say? Till here, I'll tell you what is happening. See, I'll show you here, guys. PGBP normal, you have 10 lakhs of profit. PGBP speculation loss, you have 7 lakh rupees, which you cannot set off with anything. Loss from house property 2,50,000, which is let out property. First of all, if we need to set off this loss from house property with anything, let's first come to the bottom of the question. Because if you do not see bottom of the question and if you go and set off, gone. Sunyam, zero you will get. Because remember, recall, under default tax regime, you cannot set off with any other head. Loss from house property, only within same head. But under optional tax regime, you can set off under other head also, maximum 2 lakhs. So it becomes very important to check the bottom of the question. Compute the total income of Mr. K. Assuming that he exercised option of shifting out of default tax regime, assume Mr. K's total income excluding minors income is higher than that of wife. Guys, 2 points I can derive from this. First, 3 points. First, it is asking only total income. It is not asking anything. Is there anything? No, nothing. Only total income. How much loss you will carry forward and all? Not required. Only total income it is asking. Next, option of shifting out of means optional tax regime. This is. Next, third point I am getting here is Mr. K's total income excluding minors income is higher means you can club a minors income in Mr. K's hand only. So, just by reading the bottom of the question first, I will have more clarity. I can read the question with much better clarity. So, first I will go optional tax regime means less loss from house property. Mind you, I'll take only 2 lakhs. So, now I have 8 lakhs of PGBP normal business. I have 8 lakhs. 215 you have. Maximum 2 lakhs you will set off. Sir, what about this owning and business race horses? Very simple. IFOS you will take that. Winnings, sir. You got actual 50,000. Less expenses you can claim. Guys, expenses you can claim. But you cannot set off this loss with any other thing. Expenses 5,000. That will be 45,000 taxable. I will highlight whatever we need to take to the computation. This is loss set off. This is a profit. Next. Till here it is very clear. Next. He has earned short-term capital gains of 50,000 from equity shares on 10/5 at which he or she paid STT and long-term capital loss. Guys, short-term capital gain 111A equals 50,000. Guys, long-term capital loss. Long-term capital loss. Asset sold means 112. Asset sold means 112. 75,000 loss. Guys, big brother has a problem. Small chutku sister has income. Sorry, big brother has lot of ego issues. We will not set off anything between this. And the big brother will not go to anyone also. We will keep as it is this information. As it is this information. At least till now, we may not know. Going further, we may get some information. At least till now, it is the scenario. Next, he took a divorce. Ayyo, ayyo. Lot of divorce nowadays. Lot of divorce. He also is taking divorce. Okay, from his wife in April 2024. And custody means what? Not jail custody. Custody of the children. Who will take the children after divorce? You remember Hardik Pandya and all? Case, no? Hardik Pandya gone. Baby is with the wife. He cannot keep. Like this, there are many cricketers, no? Babies are with someone else. Who else was there? Hardik Pandya, I remember. Divorce happened. Children, they will be taken away. Property also will be. Oh, Praveen Sharma, I think. No. Mohammed Shami. Mohammed Shami also divorce case. Yes, next. Custody of their minor son is given to Mrs. K. Guys, you know what is the twist here? Income of Mr. K is high, but divorce happened. No, custody is with Mrs. K. So what will happen? Clubbing will not happen in Mr. K's hand, though his income is more, because divorce happened. No, divorce happened. No, so club in Mrs. K's hand. Papa, what a question! What a question! I love this kind of questions. Twist. For every moment, there is a twist. Following the divorce, he transferred ownership of house property to his wife. House property was there, he transferred to wife. During the financial year, property generated is 5 lakhs. Guys, this is a bait. This is a bait. If you get caught out of this bait, the ICA will pull you like this from the river. Come, baby, come out. Come out of this Jan 26 attempt. Unsuccessful. Gone. Fish gone out. This whole chapter is a nonsense information. This rental income, everything is nonsense. Sir, rental income given to spouse, sir, without consideration, sir. Deemed owner, sir. Guys, not in case of divorce, sir. Agreement to live apart means gone. No need to club. Wife story different. Wife will find another husband then. Are you getting it? So nothing is clubbed. This is all full bait. One bait will be tied to one thread and ICA will put like this and throw in the river in Jan 26 attempt. And we'll see which fish is coming in my way. Pass percentage has to be controlled. No. Gone. If you become fool or get confused, gone. Mr. K deposits cash of 50,000 every month into the bank account of a minor son. Again, same story. Trying to fool you like anything. See, minor son. During the previous year, interest income of 25,000 generated in his son's bank's account. All nonsense information. He also contributed sum of 2 lakhs to electoral test and incurred 30,000 on advertisement. Guys, advertisement and all not allowed. Guys, 2 lakhs through banker. Nothing is given means you think is a banker. This is under 80. What is that? 80 GG B or C you will get. If you are a company, I think you get under 80 GG B. You are not a company, no, 80 GG C. Sir, how much, sir? Total you will get 2 lakhs. But no political party advertisement and all you will not get. Okay, next. He authored. Chetan Bhagat is. Authored means what? Written something. Investment portfolio book. Okay, good book, no problem. Eligible book only. Regarding finance he has written. Finance, scientific, do you remember that? In Thalaiva Notes. Received royalty. Royalty is receiving. On income of 4,10,000 bulk royalty he got. From a publisher in Germany. Means foreign. Guys, foreign. Foreign means within 6 months you should get back. From the end of the year, within 6 months you should get the proceeds into India. Otherwise, you will not get any deduction, full taxable. Next. The royalty is calculated at 16%. Ayyo. Do you remember the percentage, guys? Do you remember the percentage? It is 15% only, guys. Do you remember the percentage? It is 15% only, guys. So what is it trying to say? You know, this 4,10,000 is representing 16%. but we need to calculate as per 15%. Please guys, if you want, you can refer the Thalaiva notes now when I am discussing. Okay. Yes. Next, he incurred 60,000 as expenditure for earning this income. Guys, what will happen? Royalty first. Royalty is income from other source. You will take it to income from other source. First, you will write royalty 4,10,000 less expenses 60,000. That net will be 3,50,000. Then that will be forming part of your gross total income. Now. At the time you will calculate the total income, you have to come for chapter 6A deductions. In chapter 6A deductions, you will take one section called as 80QQB. There you will find out this 15% story and all. Are you getting it? So go and refer the section once, 80QQB, and please recall once because I will apply now. Okay. Expenditure means, guys, I'll show it here. Wait a second. I'll show it here in green color. IFOS equals to, in my gross total income, how much royalty I'll add? Under royalty, under IFOS, royalty I'll add 4,10,000 minus 60,000 I'll add. That will be 3,50,000. This is not QQB. QQB will come later. So I'll write here 80 QQB. Eligible rate is 15%. Next, let's read the full. What is it? Out of total royalty of 2,90,000, out of total royalty, 2,90,000 was remitted to India by 31st August, and the balance is in abroad only. Ayyo. Out of 4,10,000 rupees, 2,90,000 is still there. Gone case. Okay. First of all, 4,10,000 is representing your 16%. Means what will be 15%? This formula I can use. Basic mathematics. Guys, this income you generated 4,10,000 by way of 16% of book sales. So, but eligible is 15% only. 4,10,000 into 15 by 16. Can you calculate and tell me? 4,10,000 into 15 by 16. I am getting 3,84375. You are perfect, Miss Kirti. But the story don't end there. Out of this, you have got how much? 2,90,000 only. Out of this whole amount, you got 2,90,000 only into India. Rest amount is there only. So how much ever you got in India, only that is eligible. No. So restricted to realized amount equals to 2,90,000. Means I am trying to say here, I will not get a total 3,84,375 as deduction total, because it may be 15%, but realization 290 only. No. Out of 290, I have expenditure how much? Less. Expenditure I incurred 60,000 rupees. The net will be how much? 290 minus 60. Guys, 2,30,000 will be eligible QQB deduction, guys. Eligible QQB deduction, guys. Yes. Yes. Everyone will focus here. Mr. Varun. I'll read the question. Mr. Varun, Indian citizen. I will be highlighting all the important parts, and this is how. I'll not again teach you how to perform in examination, separate for revisions. No. In process, you should learn, okay, how sir is doing, how he starts the question, how he understands the important points, how he finds out the tricky points. The intention of this Thalaiva training batch is not to deliver the concepts. You might have taken coaching at a lot of places. They might have delivered the same concepts. The intention here is to get the more conceptual clarity. Number two, how to find out the question tricky points, how to connect the question what is asked with the relevant concept, how to understand and arrive at the right answer. These are the intention. So if you miss the intention, there is no point. Yes. So Varun is an Indian citizen engaged in consultancy business in India. He shifted to Dubai, guys. Shifted to Dubai. Very, very important. In 2019 itself, he shifted. Yes. To expand his consultancy business. Means overseas. Means everyone focus. What is the first statement trying to say? Mr. Varun, there was an Indian citizen Varun who is having a consultancy business here in India. Till 2019, he was in India only. After that, he shifted to Dubai to expand. Expand means what? Already you have a business, you are expanding it. Mind you, he did not close the earlier business. He did not close the earlier business. Are you getting it? He did not close the earlier business. Earlier business, whatever is there in India, a profession, not business. Wrong, sorry. Profession. Business means consultancy business. Who give consultancy? Professionals only give. Yes. So language may be business, but actually it is profession, guys. Consultancy business means a profession. Yes. Now, Varun is an Indian citizen engaged in consultancy. Who give consultant? I am a professional. I am a tax consultant. Doctor is a consultant. Are you getting it? Can you call one provision store fellow who is selling chocolates as a consultant? Sir, are you a chocolate consultant, sir? You will call it a no. Who is a professional? For them only you call them as a consultant. So consultancy business is for the language they are used, but it is actually profession. Are you getting it? So engaged in the consultancy business in India, shifted to Dubai in 2019 to expand. Expand is a consultancy business in Dubai overseas. So he has an office, a professional office in India. He is expanding, means there also he is getting some clients. He is doing some consultancy and he is earning income. He visits India every year he visits India to supervise, not to surprise their employees, to supervise the officer in Delhi. Are you getting it? So in Delhi he has, means this line is also trying to tell you no, that office is already existing. It is still there. It is not closed. His stay in India for the current as well as past years is like this. Past 2021, 21, 22, this and all has given till 2024, 25. Okay, good enough. Next. During the previous year, 24, 25, he earned the following income. What income? Income from consultancy business in India. Means whatever Delhi office is there, no. This is Delhi office income. I'll write it here. Delhi office income. Income from consultancy business in Dubai. Income from consultancy business in Dubai. Mind you, this income is nothing but Indian income only, no. This will be Indian income, special income. Why? Boss, I told you, if you have a profession set up in India, and if you have a profession set up in India and it is just an expansion of your, mind you, remember that RNOR concept which I taught you. Two things I taught you. If foreign business is controlled from India, it will be called as Indian income. If profession is set up in India and you are earning any income from outside India, that will also be treated as Indian income. Yes or no? Special case scenario. See, this will also be treated as a Indian income. Yes. Now, agriculture income from land in Kerala, this will be totally exempt, no Indian income. Land in Kerala will be, see, Dubai income prima facie foreign income only, no doubt. But it is becoming Indian income because the professional consultancy is happening as an expansion of the current business which is there in India. So the foreign Dubai business is just the extension of the existing Indian Delhi business. I hope you understand. Dividend from Indian company received in Dubai. Dividend from Indian company, if it is received in Dubai, guys, if it is received in Dubai, it will be Indian income only. It will be taxed. Interest expenditure on investment in above shares, means for purchasing this Indian company shares, this person has taken a loan, and for that loan he is paying interest expenditure. Now, there is one provision in the Income Tax Act which says that if you earn a dividend income and for purchasing the shares from which you received a dividend, for that, if you have paid some interest, in that case you can claim 20% of your dividend income as expenditure. This provision we will learn going further in income from other sources chapter. Since it has come here, I am teaching you, you also learn. I repeat, if there is any income from other source like dividend, if there is a dividend income, and for purchasing the shares on which you received a dividend, you have taken a loan to purchase the shares, and you would be of course paying interest for that loan. That interest is expenditure to earn the dividend income, but they will not allow full interest expenditure for this dividend income. They will allow maximum 20% of dividend income as expenditure. So you have to tell me 50,000 into 20% will be how much? That will be 10,000, I believe. So 10,000 you can reduce from 50,000. Rest 40,000 will be your actual dividend taxable income. Okay. Now what is the next trying to say? You are required to determine Mr. Varun's residential status for assessment year 25-26, assuming he is not liable to tax in Dubai. Now, sir, tell me, sir, one thing, sir. Why is he trying to say that this person is not liable to tax in India, sir? Because you remember yesterday I taught you one concept called deemed resident concept. In deemed resident concept, I gave you some conditions to be fulfilled so that we can call a person as deemed resident. First of all, why deemed resident, sir? Deemed resident means a person who is actually non-resident in India and he is residing outside India somewhere, but he is not paying any tax there outside India. He is a non-resident in India. He resides outside India in some other country, but he do not pay any tax there. And if his Indian income, Indian taxable income, Indian source income is more than 15 lakh rupees, in that case, that person will be called as deemed resident. Now, mind you, deemed resident is always resident, not ordinary resident. No need to even check how many days he stays in India. Are you getting it? So what is the first condition I told you? He should be non-resident in India. Second, he is staying outside India and in that country he is not paying any tax. Third condition I told you, income of Indian source, Indian taxable income should be more than 15 lakh rupees. In that case, he will be treated as deemed resident. Mind you, deemed resident is always RNOR. Means we are converting a non-resident person into RNOR in this deemed resident concept. Yesterday we discussed this concept. Yes. Now, so what is the first demand of the question? Let's hit that. Yes, the first demand of the question is find out Mr. Varun's residential status, assuming he is not liable to tax in Dubai. Now, everyone, full attention needed. Everyone, what if he pays tax in other countries, sir? Yuvashri, if he pays tax in other country, we will not apply this concept. No. Then happily, whatever incomes will come here, we will check whether he was a resident in India or non-resident in India. Accordingly, we will tax him. If he is not paying tax outside India, then his residential status will change from non-resident to RNR. Are you getting it? Yes? Yes, correct. Correct, Chaudhary Saab. Now, everyone focus here. Everyone focus here. We are given a task to find out the residential status of Mr. Varun. How do you find residential status? Of course, by finding the number of days of stay in India. For finding out the number of days of stay in India, what do you find? Is he a special person or not? Is he a special person or a normal person? Mind you, he is an Indian citizen. He has already gone abroad. He is visiting India. Now, mind you, in visiting India, special case scenario, not a normal person. Mr. Varun is very, very big person, special person. He is visiting India. In that case, mind you guys, if he visits India, in that case, you need to keep in mind two things. whether his total taxable Indian income is less than or equal to 15 lakhs or more than or equal to 15 lakhs. If it is less than or equal to 15 lakhs, only first basic condition will apply. Yesterday I taught you. If more than 15 lakhs, first condition will apply. Second basic condition will apply with a change of not 60 but rather 120. Whoever have missed yesterday's class, go in yesterday's video, watch it. Right? Now. In both the scenarios, let's not even check whether his income, Indian income is less than 15 or more than 15 or whatever. He is staying how many days in the previous year? 100 days only. 100 days only, guys. 100 days only he is staying. So he will not be satisfying any of the basic conditions, guys. Any of the basic conditions he will not be satisfying. That's why he will become non-resident. Till non-resident, is it clear for everyone? Till non-resident, is it clear for everyone? He has stayed only for 100 days, means he is not satisfying any basic condition. He has stayed only 100 days. Only 100 days. Go, if you have taken my note, you go to both the special case scenarios. In both the special case scenarios, less than equal to 15 lakhs or more than 15 lakhs, in both the scenarios, you will understand one thing. In the basic condition, at least 182 days you should stay in the first special case. In the second special case, in the basic condition, you should stay at least 182 days, or in the place of 60, it becomes what? 120. So you are not even doing that. Can you again can you revise again, sir? I'm sorry, Prashant. Prashant, we have very limited time. If we keep on revising the same concepts, it will be very tough to cover the whole syllabus in 20-25 days. You can refer the yesterday's class, Mr. Prashant Pai. Yes. So he is becoming a non-resident here, guys. So as soon as you tell if he is a non-resident, he is not liable to tax in Dubai. In the question it is saying he is not liable to tax in Dubai. Second condition also being met. First condition, non-resident in India. Second condition, he is not liable to tax in Dubai. Third condition is what? Third condition is what? His income should be more than 15 lakh rupees in order to call him as deemed resident. So we need to check whether out of this income, is his income more than 15 lakh rupees? Is his income more than 15 lakh rupees or not? So that we can call him deemed resident. And his residential status will become RNOR. If his income don't exceed 15 lakh rupees, then he will not become deemed resident. He will not become RNOR. He will become non-resident. His status will become non-resident, guys. So let's check. So 10 lakhs, I told you, will be Delhi income. So 10 lakhs will be Delhi income. And 4 lakhs, mind you, 4 lakhs he is getting from consultancy business in Dubai. Guys, business in Dubai is extension of a profession which is set up in India. I told you in the case of RNOR. See, in RNOR itself you are taxing, means you will not tax in a resident case. You will tax no. Are you getting it? So look at the nature of income. It is Indian income or not? It is Indian income or not? Yes, it is Indian income. So that will be another 4 lakh rupees. So that will be 4 lakh rupees. Mind you, guys, everyone focus here. Guys, everyone, I need full 200% attention. I need full 200% attention. You will not chat anything. Please, everyone focus here. I want everyone's focus here. Mind you, we are not finding the 15 lakhs limit. We are not focus on the words which I am using, guys. I am taking so much of effort because I expect, I can feel the pain of lot of students, guys. Many students have pinged me on WhatsApp, called me after I started my session. Hundreds of students have pinged me, sir, please make me clear this examination. And that is why I am taking so much of effort. I am going in deep with the root, deep of the concept. Though a lot of students are watching it free, I am not teaching as if it is free session. Are you getting it? Please take the full benefit of this power pack session, guys. 15 lakhs limit, which we will be finding out. We are not finding out based on the residential status, mind you. We are not finding out based on the residential status of this person, this 15 lakhs limit. We are finding it out on the based on whether this particular income is Indian source income or not. Because you go and refer the concept which I told you. I told you that you need to refer whether this person has Indian sourced taxable income more than 15 lakhs or not. So you will not say, sir, he is not resident. No, sir. So why are we taxing this 10 lakhs which is there in the, no, you will not apply like that. Are you getting it? Yes. So 4 lakhs from Dubai business, which is extension, 70,000 which is Kerala agriculture income is exempt. Dubai dividend from Indian company, I told you 40,000 we will take. So 40,000 if I take, that will be 14 lakh 40,000. Guys, everyone, 14 lakh 40,000 means, did this person satisfy all the conditions for deemed resident? No. He is a non-resident, no doubt. He is having a foreign income which is not paying tax on, but he missed on the final condition, which is his income should be, Indian taxable income should be more than 15 lakh rupees. That got missed, and his residential status will stay as non-resident only. No need to even check. No need to even check whether he is RNO or whatever. So his residential status, the first question answer will be residential status of Mr. Varun is non-resident. Next question we will be looking at. Compute. Now, residential status you found out. Now, what is the question trying to ask you? Compute the total income of Mr. Varun for previous year 24-25. If he opts out of the default tax regime, now, in the question 2, you have to link this question 1 with question 2. Means the question 2 is saying, okay, first to find out what is his residential status. Then in the second question, it is saying, based on the residential status which you found out, find out his total income. Are you getting it? Now we will see whether that particular income is taxable as per a non-residential status. So now the first income, I am deleting all this here for better clarity. We will now find out the total income of Mr. Varun as if he is a non-resident now. So 10 lakhs tell me this is a consultancy business in India. Non-resident getting Indian income, fully taxable. Total income will be 10 lakhs. Sorry, not total income. Total taxable Indian consultancy business income will be 10 lakh rupees. Now come the very, very important point. Remember the chart which I showed you. Everyone here. Everyone focus here. Remember the chart which I showed you. 1 second. One second, guys. Remember the chart which I showed you, guys. Yes, this one. Remember this chart. This I told you already. If the business is controlled, from India, this is only taxable in the case of resident, not ordinary resident. This concept you cannot apply in the case of non-resident. Non-resident only pays tax on Indian income, guys. Only pays tax on Indian income. He do not pay tax on Indian business controlled and all. Are you getting it? Yes. So in this case, guys, here after 10 lakh rupees, this 4 lakh rupees we will not consider because he is a non-resident. We will take this as 0, guys. Not taxable in the case of non-resident. Next, Kerala income 0 because it is agriculture income. Dubai income we already computed as a 40,000 rupees. Is it crystal clear? So the total income of Mr. Varun will become 10 lakh 40,000. 10 lakh 40,000 will become Mr. Varun's income. Is this question clear for otherwise? No. Okay. Now, Shweta, please 100% attention at the time when I teach the question, guys. This is more important. Shweta, citizen of India, is a chartered accountant. She is like us only, one among us, our family member. She is a working partner. in Shweta and Varun Associates. So there is one firm, practicing chartered accountant firm, which is called as Shweta and Varun Associates, which was set up in Chennai, guys. So in Chennai, India, there is a partnership firm in which Mrs. Shweta is a partner. She visits foreign country A. Country A. Country A means country name is A. Are you getting it? Country A quite often. Quite often means she keep on going every now and then. And provides accounting services to corporates. She has a lot of knowledge, no? Chartered accountant, lot of accounting knowledge is there. She is not understand where to utilize. He is utilizing full in his Indian firm, but still so much of knowledge is there. Somewhere we should utilize, no? Otherwise, this memory will blast. So we should utilize by throwing the memory out. Yes. So she is going abroad also to utilize this memory. So she visits a foreign country A quite often and provides accounting services to corporates there in her individual capacity. Sir, what is this, sir? You are repeating like a tape record is stuck. When a tape record gets stuck, it repeats the same thing. Like that you are repeating, sir. Your voice got stuck, sir. No. This is very, very important point, and that is why I got stuck here. This way you remember in examination. Okay. Okay, once this question gets over, I'll give you one beautiful one lesson learning I'll give you. Okay, wait. See, what is individual capacity, you know? Shweta is going and providing consultancy services abroad, not on behalf of Varun and Shweta Associates partnership firm. She is providing services, individual capacity means whenever she goes to country A, let's say for example, we will imagine it as America. Let's say for example, she goes to country A, which is America. Whenever she goes and meets the client, everyone, I need 200% attention. This is a very latest attempt, September 25 question. Like this, they ask you question. If you don't give the full 100% attention, then how will you solve it? Yes, now. Yes, now. Whenever she will go to USA to meet the client, she will not introduce herself. Sir, I am partner from Shweta and Varun Associates, sir. No, she will not tell like that. What she will tell, you know, to the client? I am a chartered accountant from India. I have so much of memory from accounting services. I want to give you that accounting memory. So you give me some money. I want to give you accounting services. She will tell, I am only here to provide you service. I do not have any connection with that Indian firm, mind you. I am not sent from my Indian partnership firm. Means she is doing this on her own. Means whatever income she will earn, no. That accounting services, whatever she will give, whatever money she will receive, that professional services will not be forming part of income of partnership firm in India, mind you. That will be her personal professional income. Means that income will not form part of the partnership firm's books of accounts. Means this professional services is not extension of the existing business which is there in India, guys. In country A, she is not subject to tax. Oh, again, she is not subject to any income tax. Means let's imagine she has gone to Dubai only. Welcome to Dubai. BB, yes, like this. So in country A, she is not subject to any income tax. Sir, only Dubai is there in the world? No, there are lot of countries. Mauritius, Cayman Islands. These are some countries where Vijay Mallya and all, Nirav Modi and all take a bag full of money. They will just flow away. Yes. Now the details of her income for the financial year 24-25 is as follows. So mind you, this small paragraph itself has so much complicated information in your, they will feed you in your mind. In examination, the moment you look at the question, you will get shocks, vibrations, you will get, oh, what is this question? Sometimes she goes to Dubai in her personal capacity and all. Yes, so let's learn this. Remuneration from her CA firm in India, means the firm which is there in India, from there, of course, she will get remuneration, no? Amount received in India, 16 lakhs, deductible while computing the income of the firm. Sir, why this dialogue in brackets, sir? Because there is one provision called 40B, 40 in brackets B in the PGBP chapter, which says that I will give deduction of a salary for a partnership firm to some extent, and with that limit, if it is there, in that case, guys, This 16 lakhs will be fully taxable in the hands of computed while taxing. No. So deduction is allowed to the firm means this is remuneration will be taxed in the hands of this lady. So whatever remuneration it got, this should be taxable income. Is it Indian income or not? Yes, it is Indian taxable income. It is Indian taxable income. Next, income received from providing accounting services in country A. Now mind you, she went no to Dubai. She provided accounting services. She got income from there. Received in bank account in country A. Very, very smart she is. Very, very smart she is. Now tell me guys, services performed outside India. Services performed outside India. Received money outside India. Just now I taught you concept. Both happening outside India. Then she is not liable to pay tax on this if she will become a non-resident. Means this income will become what? This income will become foreign income. This income will become foreign income. This income will become foreign income. You cannot say, sir, this is extension of the firm. No, like previous question we solved. No, because she is providing the services on individual capacity. She has no link with the firm at the time of providing this service. What a beautiful question. What a beautiful question. My mind is blown away. Yes, next. This is foreign income, guys. Mind you, earlier income, Indian income. This foreign income. Yes. Dividend from companies incorporated in country A. In country A means in Dubai there is a company which is giving dividend, and received in bank account in country A means when she went there, when she got that Dubai consultancy services income, she saw one beautiful, very, very amazing profit makeable company. So she invested there only in shares of that company, and she gave bank account details of that Dubai bank account only. So she received a dividend from that. Now mind you, here also there is no link in India. This will also be called as foreign income. Mind you, this is also called as foreign income. It is not Indian income. No Indian link. No Indian link. Because income accrued outside India, income received outside India. Income from business in country A, which was set up in country A, means business is there. For her business also there. Amma, how much money she got from consultancy? But he is controlled from Chennai. He is controlled from Chennai. He is controlled from Chennai. Mind you, if a business is set up outside India, if there is any Indian control, we will treat it as Indian income. We will treat it as Indian income for the purpose of computation of the limit. This will be an Indian income, mind you guys. This will be Indian income, mind you guys, for the purpose of calculating the limit. Is it clear? Is it clear? Yes. Now this will be Indian income. So we have two Indian incomes, we have two foreign incomes here. Now what is the question asking? Ascertain her residential status. Briefly explaining relevant provisions means you have to apply. You have to also explain along with the tax liability of income, taxability of income. Only taxability, not tax liability. Only taxability, whether it will be taxed or not. If it is taxed, how much will be taxed? Yes. For the assessment year 25-26, in the following independent situations, means there is no link between this question, this question, this question. Have you got the clarity? Independent situation means what? This is separate question. This is separate question. This is separate question. I told in the promotional video. When I promoted my batch, before starting the batch, I told in the batch that I will be training you for the examination. These points, if you keep in mind, you will be very, very careful when you will go for examination. You will be very, very careful because you must understand, you will understand that yes, boss, when we solved so many questions in the practice batch, training batch, Thalaiva has trained us. Every minute point matters a lot. Every single word has a meaning in itself. You cannot rush in examination without knowing all this information. So this small minute thing like independent situation also matters. If this is not there, means you have to link this with this, this with this. Are you getting it? Yes. Now, first question, what is it trying to ask us? She did not visit India during the during the financial year 24-25. What is the question demanding? What is the question demanding? What is the question demanding, guys? Residential status and taxability. Two questions they are asking. One, residential status and taxability of income is also asked. Taxability of income is also asked, mind you. So in every question, let's say for example, first we are solving a question number 1. In question number 1, we have to find what is her residential status. What income will be taxed? Are you getting it? Are you getting it? Yes. Now, first, she did not visit India during the financial year 24-25 means not even single day she was in India. Now, tell me, if not even single day she was in India, she will straight away become non-resident, non-resident, non-resident. She will straight away become non-resident, guys. She will straight away become non-resident, guys. She will straight away become non-resident, guys. Yes. She will straight away become non-resident. Now, everyone focus here. She is a non-resident. She is an Indian citizen. Look at the first line of the question. First line of the question. She is a non-resident. She is a citizen of India. So I am writing it here. She is a non-resident. She is a citizen of India. Indian citizen. And in the question somewhere it is mentioned. In the question somewhere it is mentioned. In the question somewhere it is mentioned. One second. Somewhere it is mentioned. No. Here. Let me focus this. She is not subject to any income. She is not subject to any income tax in country A. What is it trying to say? In country A, she is not subject to any income tax. Let me highlight it again in different color for you guys. She in a country A, she is not subject to any income tax. Means what? She is non-resident. She is a citizen of India. And she is not paying any tax outside India. Means I have to check whether she will become deemed resident or not. That complication is given here. You cannot stop by saying here only, because a lot of times students will do what looking at this information, one line, immediately they will write an answer. Since she had not stayed even a single day in 24-25, she is a non-resident. She will, this answer if you write no, Sunyam you will get in your examination. So you have to see, look at the question overall, man. So here, non-resident, we have to check whether this non-resident, can we call him as deemed resident or not by checking all the conditions. Now only one condition left out is if the total Indian income Indian sourced income, if it will exceed 15 lakh rupees, Indian sourced income, if it will exceed 15 lakh rupees, guys, only then we will call this person as a deemed resident, because other three conditions are met, mind you. She is a non-resident, she is a citizen India, she is not paying tax. Three conditions are met. Let's check the fourth condition. Fourth condition means we need to find out Indian taxable income. Indian taxable income, I told you here, already we discussed. The first income will be Indian taxable income, which is her salary. Salary will be 16 lakh rupees. This is Indian income. Okay. Next. Income received from providing accounting services. I told you this is what? Foreign income. This you cannot call it as Indian income. Then dividend from Dubai shares, foreign income. Then business is in Dubai, no doubt, but it is controlled from India. It will be treated as Indian income, guys. That is how much? 7 lakh rupees. So 7 lakhs. Total will be how much? 16 lakhs plus 7 lakhs. 23 lakh rupees. Now tell me in the chat box, guys. Chat box, you tell me, guys, whether you will treat this person as a non-resident only, or you will treat this person as resident, not ordinary resident, because all the four conditions are met for deemed resident, guys. It's a really super break and yes, he is a deemed resident. Yes, everyone got it right. Everyone got it right. Everyone now focus here. Now, what you will write in your, now Now, in the answer, what you will write, everyone, now you can stop. Now you can stop chatting, guys. Now, everyone focus. Everyone focus. Now, what you will write, in the answer, you will write two things because first question has two demands. Number one, what is the residential status? Number two, what will be the taxability of income? Means you have to tell which income is taxable, how much income is taxable, you have to tell. Are you getting it? Are you getting it? Yes. So, residential status we arrived at. For this, you will write answer resident, not ordinary resident, because he is a deemed resident. You will explain everything. First, you will explain that he is a non-resident. As per first line, if I was a student, how will I write? I'll explain you. First, I will have a heading. Computation of or assessment of residential status of, what is her name? Shweta. Assessment of residential status of Mrs. Shweta for assessment year 25-26. Everyone, please focus. How, if I have been student, how I scored 78 in my CA final direct tax paper, I'll tell you. I will write first a heading. Answer for question number 2 in bracket A. Below that, 1 in Roman, because this is my first answer. 1 in Roman I will write. For that I will write assessment of residential status of Shweta. Underline. As it is given in the question that Mrs. Shweta has not stayed even a single day, or she has not visited India during the financial year 24-25. Her stay during the financial year 24-25 is 0 days. As she has stayed for only 0 days, she will become non-resident. Then you will write next line. Her income, she is an Indian citizen staying abroad, visiting India, and she is a non-resident staying in abroad in a country where she is not paying any tax. In this kind of a scenario, next line, in this kind of a scenario, we have to check whether her income, which is Indian sourced income, will be exceeding the limit of 15 lakhs or not to determine the deemed residential status of Miss Shweta. Below that, computation of total income, total Indian income for financial year 24-25. I'll write the details in table. First line, I'll write whatever service, whether it is taxable or not. Amount, if I'll write taxable means I'll write amount in the next column. In bracket, I'll write the reason also. Why I am taxing this. And below that line only I'll write. Likewise, the second point. First, I'll write the nature of income. In bracket, I'll write the reason why I am putting that amount there, or why I am putting 0 there. Likewise, I'll present. Then I will tell, as it is seen that the Indian taxable income of Ms. Shweta is not exceeding 15 lakh rupees, she is not satisfying the condition for deemed residential status. Therefore, her residential status will be non-resident. Or if, let's say, for example, her income exceeds 15 lakh rupees, in that case, I'll write, as we can see in the above case, Mrs. Shweta's Indian taxable income has exceeded 15 lakh rupees, then in that case, she is satisfying the conditions for deemed resident. Therefore, her residential status by default will be resident, not ordinary resident. This is how I will present. Then I'll write, based on the residential status, based on RNOR, taxability of income. Underline. Now, resident, not ordinary resident means you have to first check remuneration from a CA firm. It will be taxed. Resident, not ordinary resident, Indian income will be taxable. Then foreign income, Indian income received from providing in Dubai, and received in Dubai only. Now mind you, Dubai, provision of service also Dubai, amount also received Dubai. Foreign income will not be taxed though she is resident, not ordinary resident. Are you getting it? It will not be taxed. Why? because it is a foreign income. Mind you, foreign income will be taxed in the hands of resident, not ordinary resident, only if in two conditions: business controlled from India, profession is set up in India, and the professional income is just an extension of the Indian professional setup. But in this case scenario, in the question, it is clearly mentioned. It is in independent capacity. She has got individual capacity. She has got this income. So foreign income, I will not tax that also. Dividend income, purely foreign income, that will also I will not tax because she is RNR. But when it comes to which is a business which is there in Dubai but controlled from India, means it is a Indian income. So I will tax the same 23 lakh rupees. Okay. Sir, exactly when we have to check for the special cases. See, it all depends. You have to look at the facts, Yuvashri. Like we have a broken in the question. The moment you see, you have to, it is like a puzzle, Yuvashri. It is like a puzzle actually, because nowhere in the question it will be mentioned. He is a special case person. No. How will you find out? I told you yesterday only, special case means how will you find out? Either person going outside India for employment, either a person going as a crew member, either a person visiting India, staying abroad. These are the few factors you will keep in mind to exactly hit at, okay, it is a special case. Or in the question, the moment you see, he is not taxed anywhere in the foreign country, it will automatically click, no, we have solved this question in the practice session, like that. Is it clear, Yuvashri? So the moment you see he is not in the question, if the line is used, the person is not taxed outside India, it should click in your mind that we need to find out whether this person is a deemed resident or not. Yes, Yuvashri. So in this case, guys, the total income also will be 23 lakhs only. This will not change, guys. This will not change, guys, because we have just now understood how in case of R and R this will be taxed. Now, next scenario, I am deleting all these things because it is creating confusion. We are deleting all these things. Now it will have a better clarity now. Yes, this one we have done, guys. For this, answer is NR 23 lakhs. Okay, now she visits and stays in India for 200 days every year since 12 preceding previous year, including 24-25. We need to find two things. Number one, residential status. Number two, total taxable income in India. Yes, number one, residential status. So 200 days she is staying every year, including current year. Don't connect this question with this question, guys. Please, for God's sake, don't think that in this previous year 0 days, earlier days 200 days. No. Second question is separate, because in the question itself they are saying independent situation. So 200 days in this current year also she has stayed. Previous years also 200 days. So tell me, first of all, 200 days if she is staying, automatically first basic condition is being met. She will become resident, no doubt. Automatically resident she will become. Now. Prashant is asking, sir, first question, she is treated as deemed resident, right? Yes, deemed resident. We have discussed so far, no, Prashant. First question is not a non-resident. Okay, I have written here wrong. Okay, no problem. Okay, my mistake only. This is resident, not ordinary resident. Okay, is it clear? So I got confused. Okay, now she visits and stays in India for 200 days every year. So in this year 200 days means first basic condition met. No need to check the second basic conditions now. Then we will go to additional conditions. Additional condition number 1 says 2 out of 10 previous years you should have been resident. If she has been staying for 200 days in the past 12 years, then she is meeting the first additional condition is met. But let's look at the second additional condition. Out of the 7 preceding previous years, whether she is staying 730 days or not, 200 into 7 years, if I do 1400 will become, means she is satisfying normal condition, which is basic condition. She is satisfying additional condition 1. She is satisfying additional condition number 2 also. Are you getting it? So she will become resident and ordinary resident. In this case, she will become resident ordinary resident, guys. She will become resident ordinary resident in the second scenario. Yes. Now, what about taxability, sir? Because taxability is also has to be written, no. So remuneration, from here only I'll write, boss, about the taxability I'll write it here. Remuneration. Tell me, if a resident and ordinary resident, global income will be taxed. Nothing will be left out. So 16 lakhs fully taxable. This professional consultants is Dubai paid, Dubai received, whatever it is, 5 lakhs fully taxable. Then 8 lakhs dividend from Dubai taxable. Resident ordinary person taxable. Then 7 lakhs from business which is controlled from India. 7 lakhs. What will be the total, guys? I am getting 36 lakh rupees. I am getting 36 lakh rupees as taxable income. You should also get the same thing, because resident and ordinary resident case, this is resident and ordinary resident case, this is, yes. And accordingly, the structure which I told you to present answer in the first question, exactly same structure you will use here also. Now we will proceed to the last limb of the question, and we will understand what is this question I am trying to ask you, guys. Yes, now she did not visit India during the previous year 24-25. Again he is changing the question. And her income from profession in India is 4 lakhs for the financial year 24-25 instead of 16 lakhs. Means he is trying to say that this case is exactly the same like case number 1. I repeat, it is exactly the case like case number 1. But the income will be 4 lakhs instead of 16 lakhs. Means I'll remove all these things for not having, wait a second, I'll just remove these things so that there will no confusion. Wait, I'll remove. Yeah. Okay. Now, what is this question trying to say is this: she did not visit previous year 24-25 means in a question number 1 also she did not visit no during the financial year 2024-25 for even a single visit. Yes, single day. Means first she will become what? Non-resident. But do we stop there? No, because she has a special categories. She goes to Dubai and she is not taxed and all. Yes. Now non-resident, okay. Then she is an Indian citizen. This will apply same, no? This will apply same law. So she is a Indian citizen. She is a Indian citizen. Third thing is what? Whether she is paying tax outside India or not. This fact will remain same, no? This fact will remain same, no? She is not subject to tax, because here it is not changed. Here it is not changed. So she is not paying any tax. 3 conditions met. Fourth condition we need to check whether total Indian income is more than 15 lakhs or not. Taxability of these incomes individually we already discussed in question number 1 itself. Taxability will remain same. Only that instead of 4 lakhs, instead of 16 lakhs, you have to take 4 lakhs. Correct or not? So the total income, to check whether 15 lakhs limit is met or not, we will take 4 lakhs in this place and not 16 lakhs. This we will not take. 4 lakhs we will take. We already discussed this will not get taxed. This will, I mean, this will not be considered for 15 lakhs limit. This will also be not considered for 15 lakhs limit. Yes or no? So what we will consider here? Only 7 lakh rupees we will consider. So 4 plus 7 lakhs, that will become 11 lakh rupees. Now tell me, 3 conditions met but less than 3 conditions met but less than 15 lakh rupees. In that case, fourth condition not met means non-resident only. We will not change the residential status of Miss Shweta from non-resident to resident, not ordinary resident. We will not change. Means she is not a deemed resident. She is not a deemed resident. She is a non-resident only. She is a non-resident only. Yes. She is a non-resident only. Have you got it? Now, taxability, we can't stop there because the question has 2 requirements. No, taxability also we should check. Now, be very careful. You are a non-resident now. You are a non-resident now. Non-resident, we will come to incomes. First income, remuneration in a firm, Indian firm. Mind you, this time you will not take 16 lakhs. You will take 4 lakhs only. Now, don't think Don't think, everyone focus. Everyone focus. Don't think, don't think that you will offer this some income to tax. Mind you, I already told you one dialogue. Whenever you find this limit, you are not applying concept of residential status. You are only applying the concept of whether that particular income will be taxed in India or not, whether that particular income is an Indian income or a foreign income or not. Are you getting it? So 4 lakhs is definitely taxable because that is received from a Indian partnership firm. Now, whether accounting services provided outside India, amount created in Dubai account, totally foreign income. She is a non-resident, foreign income she will not pay tax on, 0. Dividend received from a foreign company, credited in a foreign bank account, she will not pay even a single rupee of tax, 0. Now, everyone, please everyone focus. Focus. I want everyone to focus only on the board. I want everyone to focus only on the board. Everyone to focus only on the screen, guys. Foreign income. Everyone focus, no chats, please. We will chat, don't worry. Foreign income will be taxed in the hands of ordinary resident without even checking what kind of a foreign income it is. In case of non-resident, we need not check anything. If it is a foreign income, we will not tax it. In a resident, not ordinary resident case, resident Indian income fully taxable. Foreign income, only one kind of income will be taxable. And this kind of income will be taxable only in the hands of RNR. It will not be taxed in the hands of even a non-resident. And that income, I told you, business controlled from India and profession set up in India, and there is extension of services. In this case, this person is a non-resident, guys. But the income here which has come, this income which I'll be highlighting, income from business in country A. Mind you, the business is in country A and which was set up in country A, business set up also country A, but controlled from Chennai. This if this person had been a resident, not ordinary resident, I would have taxed it. But sorry, guys, he is a non-resident. Remember my chart. I have put it in a beautiful flowchart format. See this. I told you this one you see only in the case of resident, not ordinary resident. In the case of non-resident, you see only this goes here. This does not come here. That's why I have put it in this kind of a chart. So this person is a non-resident. We will not tax that foreign income, though the business is controlled here from India. Only for resident, not ordinary resident only we consider. Had this person Shweta satisfied all 4 conditions in third part of the question also, we would have offered that business income controlled from Chennai also to tax. But she has not satisfied conditions. She is becoming non-resident only. That's why we will not offer this 7 lakhs to tax. Means this also will become sunyam here. This will also become sunyam here. Her total income will be 4 lakh rupees, which will be taxable, guys. 4 lakhs is total income comprising of 4 lakhs will be taxable, guys. Is it crystal clear for everyone, guys? Yes. So, Mr. Shobit, I am going to read the question. Guys, if anyone new, in this description of this video, you will find a link, Thalaiva free resources. Just click on that. You will get all the resources which I am using in the classroom. Thalaiva Notes you will get, Thalaiva PDF of the question bank you will get, and this RTPs, MTPs, everything you will find it there. You can just click and download and you can use it. Okay, so I'm going to read the question, guys, in the same style. We'll first analyze the question, then we will jump into solving the question, guys. Mr. Shobit, resident individual, age 54 years. Yadav, good morning. Anirudh, good morning. Venugopal, good morning. So, Mr. Shobit, a resident individual aged 54 years, engaged in the manufacture, guys, this is a manufacturing business of spare parts of cars. He follows the mercantile system of accounting and regularly files his return of income. Regularly files his return of income. Let's see, what is it? The profit and loss account for the year ended shows a net profit, guys, of 57 lakh 25,000 after debiting or crediting the following information. So this net profit has been arrived after considering these points whichever are given here after debiting or crediting these items. So we will look at to these points, and if we find that any expenditure is unnecessary, we need to disallow, so we will add back. If we find that some income which pertains to IFOS or something is considered, we will just reduce from the profit, guys. Next, during the year, Mr. Shobit purchased plant and machinery for 55 lakhs, for which he took loan from a scheduled bank. Date of loan is 1/5/24. Rate of interest is 11% per annum. Okay. The asset was acquired on 1 July 2024 and put to use on 1/9/2024. The entire interest amount is debited to profit and loss account. Guys, attention needed to this question because this is a new adjustment. We have not come across this adjustment yet in the previous questions which we have done. Sir, what is this? Guys, you need to understand one concept. If you have taken any loan for purchase of an asset, in that case, the interest which you pay until the date you put to use the asset, that interest should be capitalized. In our example, 55 lakhs is the purchase value of asset. Cost of acquisition, you can see here, one second. See here, plant and machinery purchased for 55 lakhs for which he took loan, right? So, cost of acquisition of the asset will be 55 lakhs. To that 55 lakhs, we need to add the interest up to the date of put to use. That's what loss is. Sir, what will happen after the date of put to use? Whatever interest is paid, that interest you can claim as expenditure in the profit and loss account. But what has happened here? The entire interest amount is debited to profit and loss account, which is absolutely wrong. You can only debit that profit and loss, debit that part of interest which is paid after the date of put to use, guys. Before the date of put to use, interest has to be added to the cost of acquisition. Now, when did the asset was started put to use? The asset was put to use on 1st of September. When did you take the loan? From the day you will take the loan, you will start paying the interest. So, loan was taken on 1st of May 2024. Sir, but the asset was acquired on 1 July. Does not matter. Does not matter. Right from this month till this month, you have to capitalize. Because guys, once you take the loan, the interest will start. And why you took the loan? For the purchase of asset, right? So from this date till this date, how many months do we have? 5, 6, 7, 8. Sir, 9, sir. 9 you already capitalized. I mean, you already started put to use. So 5th, 6th, 7th, 8th. 4 months interest we need to capitalize, guys. So 4 months interest I will calculate here. Interest up to put to use. How much that will be? 55 lakhs into 11% is the rate given into 4/12. So that will be how much? Let me check one second. So that's, guys, 2 lakhs 1,667. This I have to add to the cost of acquisition. On this amount, I will claim depreciation on the total amount. Correct, Vidyasri, Priya Chandrasekhar? Absolutely correct. Right? So on this amount, we will calculate the depreciation. But that is depreciation, separate concept. What we are doing here is from the interest, we need to only take that part of interest after date of put to use. Now, what interest they would have taken, or this interest, if I have to adjust, what adjustment I'll do, I will just add back this interest. I will just add back this interest. So add back interest, because you are already debited this 2,01,667. So we need to add back interest of 2,01,667. So this is the adjustment we will do. from the profit, you have already reduced more excess expenditure, so we have to add back. Next, that's one adjustment. On 1/4/2024, guys, we will compute the depreciation on the total, guys, on this total 55 lakhs plus 201,667. So we will calculate depreciation on 57 lakh 1,667, guys. Mind you, this is one more thing. This is plant and machinery, guys. This is plant and machinery. If a new plant and machinery is purchased, that too in case of manufacturing business, here additional depreciation also will come. Additional depreciation also will come, guys. I hope you are getting it. And since the date of put to use is 3rd October or before, we will take full rate of depreciation at the rate of 15%. These all points should come into your mind. Next. On 1/4/2014, the production manager working in the factory of Mr. Shobit took a voluntary retirement from the services. Mr. Shobit paid him 8 lakhs as a compensation for his services under the voluntary retirement scheme. Guys, this person Shobit has given voluntary retirement amount of 8 lakh rupees to one of its employee. One of its employee, only if it is OTR. Correct. Correct, Vidyasri. We will check that at the end anyway. Yes. So, okay. Otherwise, let's check that if you wish. 1 second. You are required to compute the total income of Shobit and also tax payable by him after TDS TCS credit, if any, for assessment year 25-26. If he is opting out of default tax regime, guys, this is optional tax regime only, guys. We need to find out first the total income, then we will find out the tax payable, then we will find out the TDS TCS credit, and we will take that credit. Okay, so this is optional tax regime. So yes, I am eligible for additional depreciation as well. Next. So this voluntary retirement scheme of 8 lakhs, guys, if you remember, voluntary retirement compensation only 1/5 will be allowed. So this 8 lakhs will not be given as a deduction in 1 year itself. 8 lakhs will be divided by 5. That is 8 lakhs by 5. 1,60,000, guys. 1,60,000, 1,60,000, 1,60,000, like this. In 5 years, you will get it. Now, what has happened here? From the profit, already you reduced 8 lakhs. So you reduce the excess. So you need to add back 4/5. 1/5 is eligible anyway. You need to add back 4/5 means I will add back 8 lakhs into 4 by 5. That will be how much? That will 6,40,000, guys. 6,40,000. I'll write it as add back. Add back. Perfect, Vidyasri. Next. Mr. Shobit purchased raw material from Mrs. Kamal and Sons, a micro enterprise. Guys, we discussed this topic in detail already. And Hitesh and Sons, medium enterprise. This is medium, guys. There are two entities. One is Kamal and Sons, micro enterprise. Hitesh and Sons, medium enterprise. For 51,000 and 75,000 respectively on 15th of March. So guys, I'm writing here 15th of March 2025 is the date of purchase. Next, as per the written agreement, guys, there are two concepts. If there is written agreement, then the payment to micro and small, medium is not covered here. Medium is not covered by the law. Only micro and small enterprises, you need to make the payment within the agreement date if there is an agreement. But the agreement date should not exceed more than 45 days. More than 45 days from the date of purchase. Sir, what happens if the agreement date is more than 45 days? Then you need to make payment before on or before 45 days of date of purchase. If not made, then you will not get the allowance. If there is no agreement, within 15 days you need to make the payment. Yes, but here agreement exists. So within 45 days of date of purchase, you need to make the payment. Correct? Next. As per the written agreement with them, both the payment has to be made by 10/4/2025. Is this 10/4? If it is 10/4 is the date of agreement, guys. Date of agreement is 10/4, which is less than 45 days itself, correct? Because 15th of March till 15th of 4 April itself becomes 1 month. So it is a less than 45 only. So yes, agreement date is well within 45 days, no problem. Mr. Shobit made the payment to Kamal and Sons and Hitesh and Sons on so and so dates. Guys, to Kamal and Sons, the payment is done on 9/4. Kamal means what? Kamal is a micro enterprise, guys. To micro enterprise, to micro enterprise, the payment is done well within the date, because here the payment was done 9/4/2025. So for Kamal enterprise, there will be no disallowance. So zero disallowance for Kamal. Now, Hitesh and Co, they made payment in November, very late. But the problem here is Hitesh is a medium enterprise. We will not give any disallowance. It is okay even if the payment is made late, because only for micro and small enterprises this provision will apply. So for Hitesh and Sons, we cannot apply the provision. So for Hitesh also, no disallowance under this section. So technically, if I have to say, no adjustment for this point number 3, no adjustment needed from the profit and loss account. Next, he contributed 20% of basic salary. 20% of basic salary. He means whom? He is an employer. He is contributing for his employees to the account of each employee under a pension scheme referred to under section 80CCD. Guys, I taught you this concept in PGBP head, guys. Employer contributing for employee, right? Which is debited to profit and loss account. So he computed 20% of basic salary and he deposited that in the employee's account under section pension scheme 80CCD section, guys. Basic salary of the employees aggregate to 10 lakhs and the dearness allowance is 40% of basic salary, guys. And it forms part of retirement benefits. Guys, employer, he contributed only, actual contribution is 20% of basic salary he contributed. That is how much? Shall we check that? 20% of 10 lakhs. That is how much? That is 2 lakh rupees he actually contributed. But as per the section, as per the provisions of the Income Tax Act, as per the PGBP head, the employer can maximum contribute 14% of basic salary plus dearness allowance in terms. If you don't remember, go back to PGBP, you will find this provision in my book Thalaiva Notes also. Yes. So now 14% of basic is how much? 10 lakhs plus dearness allowance in terms only we need to take. Dearness allowance is 40% of basic salary and it forms part of retirement benefits. Means only 40% of a basic salary will form part of, yes, Priya Chandrasekhar, correct. 40% of basic salary will be full dearness allowance in terms. So I can take 40% of 10 lakhs, that will be 4 lakhs, correct? So I will directly write 10%, wait a second, I'll write 40% of 10 lakhs is 4 lakhs. So 4 lakhs into 40% is how much? 4 lakhs, sorry, 14 lakhs into 14 lakhs into 14 lakhs into 14%. 14 lakhs into 14% is 1,96,000, guys. Means this person was supposed to only deposit this much, but he deposited excess. Excess is deposited means excess expenditure he claimed in the P&L account. If excess expenditure claimed in the P&L account, profit went down. Now you have to increase the profit to the extent of 4,000 disallowed. So you will add back 4,000, guys. I will add back 4,000. Add back 4,000 rupees, guys. Okay. So for this, adjustment is going to be add back 4,000. I hope that's clear. Next. Depreciation debited to profit and loss account is 27,000 for 27,50,000. We will add back this depreciation. and we will calculate a proper depreciation. Again, we will reduce that depreciation. Okay. He received 13,850 as income tax refund, out of which 3850 is interest of refund. The entire amount is credited to profit and loss account. Guys, this is not claimed as expenditure. This is already claimed as income. He got income tax refund from the income tax department. There will be two components: interest component, actual refund component. Total is 13,850, guys. Total is 13,850 he received as refund, out of which 3850 is interest, and 10,000 is the actual refund what he received. Now you need to keep in mind one thing. Interest, see guys, first of all, this income tax refund should not come in profit and loss account. But he has already credited it because it was income. So he thought that should be taxed under P&L account. But that is wrong. So we will reduce 13,850. We will reduce from the P&L account profit. Then what we will do? We will go to IFOS head and we will add this interest there. Add this interest in IFOS, guys. Are you getting it? But sir, what about this 10,000? 10,000 you need not do anything. 10,000 is your 10,000 is your normal refund what you get. You paid more to the government, you are getting back that same thing excess what you paid as back in your pocket. So 10,000 first you paid excess, 10,000 they are giving you back. Where is the income? But on the 10,000, whatever interest you got, this interest of 3850, that is your income. That is why IFOS we will go and add, because that is interest that cannot be treated as business income. Yes, perfect. Priya Chandrasekhar Kirti, perfect. Yes, so that will be the adjustment, guys. We will reduce 13,850 from the profit and loss account. We will go and add 3850 of IFOS, and 10,000 we will just ignore as it is. Next. Additional information. Guys, additional information means only these informations whatever we discussed so far were given as already adjustment in profit and loss account. Additional information means that additional information which we need to yet to give adjustment to profit and loss account. Next, Shobit purchased a new computer on 31st August 2024 and was put to use on the same day in his office. Guys, computer is definitely plant and machinery category only, but you do not get additional depreciation on computer because it is not used for manufacturing purpose. It is used in office. So normal depreciation we will give on this new computer. So if it is used 30th, okay, new computer, let's see the put to use any date is given. The payment was made as under, okay, 28,000 paid in cash. Guys, if you remember, there is a section which says that if an asset is purchased for more than 10,000 rupees, payment if you have done in cash mode or other than prescribed mode, to that extent you cannot claim depreciation. That part of asset will not even be capitalized in the books. So whenever you purchase an asset, you should definitely make the payment through the prescribed modes: online banking, check, in check also, account pay check and all. But this is made in cash, so this will not be eligible for depreciation. Next, 25,000 paid by account pay check. This is eligible on 5/9/2024 as a balance cost of new computer. Guys, the simple thing is 28 plus 25. So he purchased an asset of 53,000 rupees, but he made partial payment in cash, partial payment through the prescribed mode. So this partial payment of cash will not be capitalized in the books. Only asset worth of 25,000 will be capitalized in the books of accounts. 53,000 will not be capitalized. And on this 25,000 you will be eligible to take depreciation normal and not even additional depreciation, because this is used in asset in the office, not for manufacturing purpose. Sir, how much rate we will apply? This is put to use on September, guys, which is well within the date of 3rd October. So we will claim full rate of 15% of depreciation on 25,000 guys. I will write it and keep it here. Yes, so at the rate of 15% will be sorry guys, not 15 computer, no, we will be taking at the rate of 40% full guys. We'll be taking at 40%, computer 40% guys. Yes, next. WDV as per Income Tax Act of different assets as on 1/4/2024. Means, guys, so far how many assets we have come across? So far how many assets we have come across? First, we had come across this new plant and machinery which was purchased during the year. The cost of acquisition was 55 lakhs. We need to capitalize the interest which was put to use before that, 2 lakhs 1,000. So this asset we have come across. One. Number two asset is the new computer. Number three and number four, there are totally four assets on which we need to calculate depreciation, guys. Yes, so WDV as on different assets as on means these are the previous year assets which are coming into this year. But earlier, whatever we discussed, this asset and this asset is new purchased during the year, guys. Okay, so let's look into what is given. So WDV opening is 8 lakhs and this thing simple. There is no sale in that case. At the rate of 15% full rate we will give. At the rate of furniture it is full rate we will give for this depreciation, guys. Plant and machinery 8 lakhs into 15%. Factory, okay, factory building it is, we will be giving this rate of depreciation. Okay, next. He paid 550,000 as life insurance premium taken on the life of his father who is dependent on him. Guys, life insurance premium you cannot pay for father, guys. Life insurance premium you can only pay for self, spouse, children, irrespective of dependent or independent, guys. So this will not be eligible for ATC deduction. This will not be eligible because paid for father. Sum assured and all is just a story. This will not be eligible, guys. Now coming to, he also paid 45,000 as life insurance premium taken on the life of married daughter who is not dependent on him. The sum assured is 5 lakhs and the policy was taken on 1/4/2017. Guys, every child is eligible, whether married daughter, unmarried daughter, whatever, because in ATC nowhere it is given that married daughter should not be taken, dependent daughter only should be taken, nothing like that. But there is one condition under ATC. Sum assured whatever is there, if the policy is taken after 1/4/2012, maximum 10% of the sum assured you can take. Here sum assured given is 5 lakhs. On 5 lakhs you can take maximum 10%, which is 50,000. But the payment is done how much? 45,000. 45,000 is less than 50,000. So full 45,000 we will take under ATC, guys. Got it? ATC we will take 45,000 full. No problem. Okay. Next. On 1/10/2024, he withdrew 1.50 crores in cash from two current accounts maintained by him with the PNB Bank. There are no other withdrawals during the year. Guys, you know what will happen in this? Why this information is given? Because come to the bottom of the question. Bottom of the question says what? Consider TDS and TCS credit also when you calculate your tax payable. TDS TCS, till now there was no TDS TCS transaction in the question, but this is a TDS TCS transaction, guys. 1.5 crores. Remember section 194N which I taught you in TDS chapter. I told you if any amount is withdrawn from a current account more than 1 crore rupees in a year, in that case, on the amount which is exceeding 1 crore rupees, they will deduct the bank which is from which you are withdrawing the cash. They will deduct the TDS at the rate of 2% on the excess. Guys, here 1.5 crores of cash withdrawal has happened. Out of which 1 crore if I remove, 50 lakhs will be pending, guys. Means the excess cash with you withdraw was 50 lakhs. On 50 lakhs, bank will, with TDS will deduct bank at the rate of 2% on 50 lakhs. That will be how much? That will be 1 lakh rupees, guys. bank will deduct the TDS under section 194N, 1 lakh rupees, guys. This 1 lakh we will take it as deduction or credit when we will calculate the net tax payable. I hope that's clear. Next, Mr. Shobit had sold a house on 30th March 2022. 2022. 30 March 2022. Sold a house. Sold a house. Okay. And deposited the long-term capital gains 25 lakhs in the capital gain account scheme by the due date of filing return of income. So he got a capital gain. Yes, long-term, that to long-term capital gain of 25 lakh rupees he deposited and deposited in central government account scheme. Full focus needed, guys. Long-term capital gain. This is long-term capital gain. He deposited 25 lakhs of long-term capital gain. Next. On 1st July 2024, means here 1st July 2024, he sold another house property which is resided for 1 crore rupees, guys. Yes, so another house property sold for 1 crore. He earned a long-term capital gain, guys. Again, long-term capital gain of without indexation benefit of, he earned a long-term capital gain of 50 lakh rupees. But what is the sale value? Wait a second. Let me, 1 second. What is the sale value? Let's take that only direct. So this is two different financial year, guys. Please remember, this is 2022. This is 2024. Yes. Now, full value of consideration is 1 crore rupees, guys. And he earned long-term capital gain without indexation means 50 lakhs of long-term capital gain without indexation. How much? 50 lakhs means, of course, cost of acquisition will become 50 lakhs. Simple logic. Balancing figure, this is 1 lakh, 1 crore minus 50 lakhs will be 50 lakhs. But then what is saying? Without indexation of 50 lakhs on sale of this property on Jan 2025, he withdrew the whole money out of his capital gain account and invested 60 lakhs on construction of a house in Mumbai. So he invested this whole, means what? Long-term capital gain account, whatever amount was there, long-term capital gain amount, whatever was there, he invested 60 lakh rupees on construction of a house in Mumbai. The construction of the house completed. Indexed cost of acquisition is okay, guys. See, he purchased a new property. Purchase 60 lakh rupees. Now, guys, you need to remember one thing. This story is kind of section 54 story, which says that if you sell a property and if you get any long-term capital gain, in that case, if you sell a property and you are getting any long-term capital gain, in that case, you need to reinvest the long-term capital gain amount in another house property. Now, what has happened? First, in 2022, he got a long-term capital gain of 25 lakhs. So he put that in capital gain account scheme. And what does the capital gain account scheme says? If you are planning to purchase a property, within 2 years you purchase, or if you want to construct, then construct within 3 years. Out of this investment you have to do 25 lakhs, only long-term capital gain you have to invest. But then he purchased a property. I mean, he sold one more property in the next year. He has not purchased anything yet till here. He sold one more property in the next year. Again, he got a long-term capital gain of 50 lakhs. But guys, mind you, for long-term capital gain, under section 54, if you have to take the benefit, you cannot take without indexation amount. You have to take indexed amount only. Correct? So, but indexed cost of acquisition is given how much here? Indexed cost of acquisition. Somewhere it was given, no? Wait a second, let me check. 25 lakhs resided, sold another house property, earned long-term capital gain indexation on withdrew the whole money and construction of house. Here, the indexed cost of acquisition of the property is 60 lakhs, 60 lakhs. Yes. So, guys, I cannot reduce 50 lakhs from here. I have to take cost of acquisition, indexed cost only I will take. That will be 60 lakhs. So that will give me not 50 lakhs of long-term capital gain. That will give me 40 lakhs of long-term capital gain with the indexation, indexed. Now, 40 lakhs this amount, 25 lakhs this amount, total amount will be, total long-term capital gain will be 65 lakhs. Correct? Let me write it properly again. 1 second. Total long-term capital gain is going to be 65 lakhs. Out of the 65 lakhs, he purchased for 60 lakhs. Out of this 65 lakhs, he purchased for 60 lakhs. I mean, he constructed, right? Now, but you need to look at in the current year, how much of long-term capital gain you got? 40 lakhs you got. 40 lakhs you got. But how much you invested here? Only 40 and 65. Out of the 65, you invested 60. Guys, if you invested 60 lakh rupees, if you invested 60 lakh rupees, out of the 60 lakhs, 25 lakhs is this previous year. 25 lakhs is the previous year long-term capital gain. So balance will be what? 35 lakhs only current year profit, current year capital gain you invested. Correct? Now, out of 40 lakhs, you invested only 35 lakh rupees. Then 5 lakhs will be taxable long-term capital gain. Got it? 5 lakhs will be taxable long-term capital gain. You invested only 35 lakh rupees. Next, you are required to compute total income tax payable after claiming the TDS TCS credit. How much TDS credit we have? 1 lakh rupees of TDS credit we have. Slowly, step by step, I'll teach you now how to present in examination, guys. Okay. Okay. Let's start the answer, guys. You can also start. I will start. Okay. I'll write September 2025 RTP question number 10. This is. Yes, guys. First, I'll write heading. 1 second. First, I'll write the heading. Computation of total income, comma, tax payable after claiming TDS credit of Mr. Shobit for assessment year 25-26. And I'll write in bracket here optional tax regime. Guys, in examination, don't write only OTR. Try to write like this optional, because the examiner may not understand. Yes, write like this. Next. We need to find out the total income. We will first take the format. Particulars, rupees and rupees. Yes, once. Yes. Let me stretch it a bit more. Give me 2 minutes. I'll keep the format ready so that we can directly just put in the figures. First, we will take The PGBP profit given, PGBP head. Guys, always write the head, guys. Profits and gains from business or profession. Then I'll write net profit. 57 lakh 25,000 is given. We'll go one by one. First, from the given information, which was pertaining to the debits and credits already done to the profit and loss account, we will consider those incomes which are credited in the profit and loss account wrongly. We will reduce that. If you remember, only one such income was there: interest on income tax refund and income tax refund. So first, less incomes credited. You have to write this: incomes credited to profit and loss account to be exempt or consider separately. Consider separately means consider it under other head. First, income tax refund. Guys, total income tax refund I have to take. Total 13,850, guys. I'll reduce. Next. There is no other income which was wrongly credited. Now there are only expenditures which are wrongly taken. So I'll add. Expenses all add, no disallowed expenses. Add items debited to profit and loss account to be disallowed or consider separate. Okay, first one will take interest which you already debited, but for till put to use we have to add back. Interest on plant and machinery till put to use date. 55 lakhs was the cost of acquisition into 11% is the rate. I told 4 months you will take by 12 months. That will be I am getting 201667. Adding back. Next, MSME payment. Guys, MSME payment we discussed already to Kamal within agreed date, agreement date. So, no disallowance. Next, to Hitesh. To Hitesh, provision not applicable in case of medium enterprise. So, 0. Next, 80 CCD payment in pension scheme. Guys, 80 CCD, first we will take actual contribution equals to, I'll write here 20% of basic they have done 10 lakhs, that will be 2 lakhs only. Next. But eligible is how much? Eligible how much? 14% of basic plus TA in terms. So that is 14% of 10 lakhs plus 4 lakhs. So that is 1 lakh 96,000. I'll write here 4,000 excess disallowed. So I'll write here 4,000. Next, I'll go to depreciation now. Guys, there are 4 assets on which we need to claim depreciation, guys, if you remember, right? So first, depreciation on computer. The new computer which was purchased, right? 28,000 in cash payment, what you did, 0. 25,000 in bank payment which you did, that will be 25,000 into 40%. That will be how much? 10,000. So let me take this out, 10,000. Next, plant and machinery. Plant and machinery, guys. Opening was 8 lakhs. If you remember, we had purchased the machinery in this year, right? So add new plant and machinery 55 lakhs. Do you remember that? Yes. Next, add the interest which we have capitalized here. This interest has to give capitalized, right? So capitalized in the sense what? We need to add to the cost of acquisition. So add interest capitalized. So if interest is capitalized, on the depreciation also will be eligible. So that is 2,01,667. That is total how much? 65 lakh 1,667, guys. Next, normal depreciation on the total at the rate of 15% will be how much? 9,75,250. Next, additional depreciation is also there, but additional depreciation not on the total amount, only on the new plant and machinery amount. That is additional depreciation at the rate of 20% of 55 lakhs plus 201,667. On that we will calculate 20%. That is 11 lakh 40,333, guys. So the total of these two will be how much? We will get 21 lakh 15,584. Yes, add back. So we have reduced this. Okay, next. Depreciation on building is also there. Depreciation on building. Wait a second. Guys, depreciation, actual depreciation we need to first add back, right? That is 27 lakh 50,000. Actual depreciation already debited to profit and loss account. Next we are calculating. Okay. Now depreciation on building. 6 lakh 45,000 into 10%. That will be 64,500. Okay. Now, total PGBP will get here. Let's see how much it is. I'm getting 1 second. I'm getting how much? 725,000. Guys, how much are you getting? One second, guys. Okay, we are yet to take voluntary retirement. Let's take voluntary retirement also. Voluntary retirement. Voluntary retirement. We need to add back 4/5, right? 4/5 of 8 lakhs equals to how much is that? 6 lakh 40,000. We'll add back here directly. 6 lakh 40,000. Now we will get 1 second. I'm getting 7116 PGBP. PGBP 71 lakh 16,733, guys. You're correct, Priya Chandrasekhar. Absolutely correct. Next, capital gains. Capital gains, guys. Full value of consideration 1 crore. Okay. Less indexed cost we will take here. Indexed cost of acquisition is 60 lakhs. So that will give us 40 lakhs. Out of 40 lakhs, how much is 54 exemption? Less 54 exemption. How much you can claim in this? Mind you, you totally invested total investment in new constructed house equals to 60 lakhs, guys. Out of 60 lakhs less capital gain used from old long-term capital gain equals 25 lakhs. So net 35 lakhs used long-term capital gain in current year. So if 35 lakhs only used means only 35 lakhs exemption we will give. So that will be 5 lakhs of long-term capital gain taxable. Next, we will take IFOS also. IFOS. Interest will come here. Interest on refund. Interest on income tax refund. 3850, guys. So we'll get gross total income equals to gross total income will be 7,116,733 plus 5 lakhs plus 3,850. 76 lakh 20,584. 76 lakh 20,584. Next, we need to take chapter 6A deductions from this. Less chapter 6A deductions. 80C. Father's LIC we will not get. Father LIC. Sunyam. Then 80C. Daughter LIC we will get. Daughter LIC. We already checked it is within limit. So 45,000 guys. 45,000. Next. Do we have any other 80D or something like that? No. So total income, let's see how much it is. Total income guys will be 7575,583 guys. So now we need to find out the tax liability. First we will remove off less basic exemption limit. That's optional tax regime. Age is how much? Less than this thing. So basic exemption limit, then taxable total income will be 73 lakh 25,584. Next. First, let's go in the order. Winnings 112A, 111A, 112 in that order, right? So first we will take 112A. Tax on LTCG 112. How much is the long-term capital gain we got here? You see 5 lakhs. So 5 lakhs into 20%. That will be 1 lakh. Next. Tax on remaining income as per the slab rate under optional tax regime. Yes. So guys, first we will remove off 73 lakh 25,584 minus 5 lakhs. That will be how much? 68 lakh 25,584. On this we need to calculate the tax amount. So first 10 lakhs will be 1,12,500. You also compute, you will get it. Every time you will get the same amount. But beyond 10 lakhs means on 58 lakh 25,584, we need to compute 30%. Beyond 7 lakhs, sorry. 7 lakhs means 68, 25, 584 minus 7 lakhs. 7 lakhs are 2 to 5. 2.52, no, 2.5, 7.5, 7.5, sorry, 7.5. 60 lakh 75 on that 30% will be 18 lakh 22,675. That will be 19 lakh 35,175 guys. Guys, here be very careful. In this, don't again give 2,50,000 basic exemption. Already you have taken the basic exemption here. So how will you compute this 68 lakh 25,000 is? This is tax on 7 lakh 50,000. Sir, how sir 7 lakh 50,000? 0 to 2.5, 0, that 2.5 will already gone. 2.5 to 5 lakhs, the difference is 2 lakh 50,000. And 5 to 10, the difference will be 5. So 5 plus 2.5 is 7.5. You are getting it? So from this, you remove 7 lakh 50,000. On whatever balance is there, on that you will calculate at the rate of 30%. I hope you got it. If you did not understand, repeat the video. Paid students, you will watch it later, you will get it. Okay. Okay. Next. So total basic tax liability, including long-term capital gain, everything is 1935 175 plus 1 lakh. 20 lakh 35,000 175. Next. Add. Surcharge is there because the income has exceeded 50 lakh rupees. So surcharge at the rate of 10%. 2 lakh 3,517. Total will be 22 lakh 38,693. Add. Health and education cess at the rate of 4%. Into 4%, if I do 89,548. That is total of 23 lakh 28,240. Now we need to take the TDS credit less TDS credit. What TDS? TDS under section 194N on cash withdrawal on cash withdrawal more than 1 crore at the rate of 2%. So I'll write here 1.5 crores minus 1 crore into 2%. 50 lakhs into 2%. That is 1 lakh. So if I have to remove that as well, so if I remove that, total tax liability will be 22 lakh 28,240 rupees, guys.